We've had investment committee members take profits in Apple and Amazon. John, is it time to do that in some of these other stocks?
Anytime somebody wants to take profits, Scott, they can and they should. They also have to consider those tax ramifications. So in a non-taxable account, of course, you can get to the sideline, wait for a little bit, and then if you get that pullback, just make sure you take advantage of that dip. But as far as going forward, Scott, you know, the biggest ones, Amazon, Apple, Netflix, I don't know what derails them right now, based on like your reporting, your great reporting about, you know, cases spiking and so forth. How does that negatively affect those stocks? It does not. In fact, 5G for Apple is going to be one of the biggest things to happen over at Apple in an awfully long time. Amazon, you know, I think that's still a great stock with a lot of upside. But I'm not going to question somebody if they want to take money off the table and try some of these other areas of the economy. For instance, today I was taking bites of Hilton, L Brands, Constellation, Splunk, added more to Netflix. I mean, those were some of the areas that I saw, but I didn't have to sell the others to do that, Scott.
I mentioned Splunk is on the list of new highs today. Sorry, Doc. Splunk's on the list of new highs today.
No, yeah, and what a great stock. You know, data mining. Come on, again, Dun & Bradstreet just came public today with this, and the shares are up, I think, 16%.
What's the valuation of what? Do you know what the valuation of Splunk is?
I don't, but I can pull it up for you.
Pull it up. No, I mean, I'm just thinking about, you know, the comment that I made a moment ago, right? The stock's up 83% in 3 months. And this willingness of investors, and you among them, John, to continue to pay up for where the growth is. This is such a perfect example of the kind of debate and discussion we're having right now.
But you look at...
Right. Market cap, by the way, 32.
You look at like a PayPal, right?
Sorry.
So you talked about kind of the competition with, you know, because I love Square. I did talk about that. I told folks about that, what, $50 ago. But you look at PayPal, it's trading at 50 times earnings, but the addressable market is tremendous, right? So when you talk about these tech names and you talk about the growth opportunity that's out there, and so whether it's in payment services or whether it's in kind of the social media platforms, the opportunities are tremendous. And with, unfortunately, or, you know, obviously it's great that the economy and people are adapting to the new ways of the world and are now using some of these forms of technology. But all that means is we're still going to continue to grow in them. So, you know, again, I agree with John on the fact that if you want to take some profits, it makes sense for you, then do that. For someone like me that doesn't have to necessarily take the profits off the table or reallocate because I'm not managing to a benchmark, I'm going to sit on names that I think are going to continue to go up vis-a-vis, you know, where we are with the situation with COVID, as well as in the long term from a business perspective.
Yeah. Kevin O'Leary, those are good points. Kevin, how do you see this, right? Splunk, PayPal, Square, know why they're all up. Some of them are a double in 3 months. That doesn't raise any, you know, concern?
Yeah. Well, Scott, you have to put yourself in one of two camps when you buy these stocks at these valuations. I completely get what you're saying. But either you believe that we have compressed 5 years of digitization into the economy into 5 months, or you don't. And if you are in the camp, as I am, as I watch it happen in my own, you know, private portfolio, I've become a very hardcore believer that is what is occurring here is an acceleration of what was going to happen anyways, but it happened really quickly. And the beneficiaries are all these companies. They are the engines. Now, whether, you know, you pay 30 or 50 times at a time when you are having a transformational change to an economy that is buoying the entire market, I might add, you either believe in this, you know, enhanced margin in the S&P in 2 years or you don't. I am in the camp of optimism, having tangibly see it every week in my tear sheets. I'm there. So I'm not selling any of these stocks except because I'm forced to in some portfolios because they've gone past a 5% weighting. I can't hold them after that. I have to trim them back. So I cry like a baby and I slice back to 5%. And then, damn it, the next week they're back up at 5% again. I mean, that's how fast these things are growing. But I'm a disciplined investor.